It's the time. It's a scheduled time. So now we'd like to begin. Thank you very much for taking your time to attend this meeting despite your busy schedule. We would now like to start NYK Group's fiscal 2025 first quarter results presentation. I'll be serving as your moderator today, and my name is Okada, Head of Investor Relations. Please bear with me. As always, we would like to first introduce the speakers for today's meeting. Executive Vice President, Executive Officer, and CFO, Mr. Kono, is here with us. And also we have Chief Executive of Liner and Logistics Business, Mr. Banno. Today, Mr. Kono will begin with the overview of the financial results for the first quarter of fiscal 2025. And after that, we would like to entertain your questions. The materials to be used for today's session is already posted on our homepage, so please refer to them as adequate. Please also be advised that the video of this session, including the Q&A session, will be posted for on-demand video distribution later. Now, without further ado, we would like to begin the explanation. Mr. Kono, the floor is yours. This is Kono, CFO. Thank you for taking your precious time, despite your busy schedule, to attend our fiscal 2025 first quarter earnings call. We thank you very much indeed. I will first explain the overview of our first quarter results, and then the forecast for the full year of fiscal 2025. I would also like to take this opportunity to explain the acquisition of the healthcare logistics business that we announced the other day. Once I finish the presentation, we would like to entertain your questions. The presentation material will be projected on the screen, but if you have already downloaded it from our homepage, please refer to them. Now, let me start with the financial highlights for the first quarter of fiscal 2025. Please see the table on page 6. The second columns from the right, highlighted in light blue, are the results for the first quarter of fiscal 25. Revenues were 609 billion yen, down 50.7 billion yen year-on-year. Recurring profit was 59.7 billion yen, down 66 billion yen year-on-year. Profit attributable to owners of the parent was 52 billion yen, down 58.1 billion yen year-on-year. The major reasons behind this decline include the deterioration of market conditions in dry bulk and liner trade businesses. In addition, other business segments were also affected by the U.S. tariff policy and the appreciation of yen. Next, about the results by segment. Please see the table on page 7. The second columns from the right, marked in light blue, show the first quarter results. In the liner and logistics business, comprising liner trade, air cargo transportation, and logistics, recurring profit for liner trade was 12.8 billion yen, down 40.8 billion yen year-on-year. Air cargo was 2.2 billion yen, down 1.2 billion yen year-on-year. And logistics business was 3.4 billion yen, down 2.1 billion yen year-on-year. In particular, in the liner trade business, amid the increased supply of ships, due to the U.S. tariff policy and the fluctuation of transportation demand from China, the freight rates changed significantly over a short period of time. As a consequence, the freight level for the first quarter declined compared to the same period of last year. Thus, recurring profit recorded a decrease year-on-year. In air cargo transportation and logistics businesses, due to uncertainties over the economic outlook caused by the U.S. tariff policies and other factors, profit level primarily of U.S.-related business declined compared to the same period last fiscal year, and we recorded a year-on-year drop in both revenues and profit. Consequently, the recurring profit for overall liner and logistics segment decreased by 44.1 billion yen year-on-year and came in at 18.4 billion yen. Next, automotive business. Recurring profit was down 8.3 billion yen year-on-year and came in at 29.4 billion yen. The number of units transported remained nearly unchanged from the same period of last fiscal year, but the Japanese currency appreciated over the dollar compared to last year, and because of the cost increases resulting from inflation, the profit recorded a decrease. In dry bulk business, profit decreased compared to the same period of last year when the market conditions were favorable, and also because of the impact of exchange rate fluctuations, which caused exchange losses in our dollar-denominated receivables and the dollar-based assets owned by overseas subsidiaries. Dry bulk business recorded a recurring loss of 3 billion yen, down 17.1 billion yen year-on-year. With respect to the energy business, LNG carrier and offshore business performed favorably, sustained by long-term contracts. VLCC market condition was also strong. On the other hand, VLGC and chemical vessels dropped significantly in April due to concerns over demand reduction caused by the U.S. tariff, before they started to recover afterwards. However, for the first quarter overall, they recorded a year-on-year decline. Recurring profit for energy business, including the one-off profits associated with the start of the new offshore business project, was 16.4 billion yen, up 5.3 billion yen year-on-year. Now if you can go back to page 3, please. Again, overall recurring profit for the first quarter was 59.7 billion yen, down 66 billion yen year-on-year. After subtracting the special profit and losses and taxes, the net income amounted to 52 billion yen, down 58.1 billion yen year-on-year. As for the share buyback program for fiscal 2025, which was started on May 9, as of July 31st, we repurchased a total of 7,921,200 shares, worth approximately 40.7 billion yen so far on an accumulated basis. Now please turn to page 8, please. As you can see from the table on the left, the 66 billion yen year-on-year decrease in recurring profit was largely due to the changes in market conditions, handling volume, and exchange rate, primarily in the liner trade business. So that was about the overview of our fiscal 2025 first quarter results. Next, I would like to move on to the full year forecast for fiscal 2025. Please open page 9. As for a full year forecast for fiscal 2025, compared to the previous forecast that we announced during the earnings call for fiscal 2024 full year on May 8, the revenue projection was revised downwards by 30 billion yen to 2,350 billion yen. Recurring profit was revised downwards by 15 billion yen to 240 billion yen, and net income was revised downwards by 10 billion yen to 240 billion yen. Please take note that in the previous forecast, the impact from the changes in external environments resulting from the U.S. tariff policies were not included. This time around, they are factored in the forecast numbers. Because it was difficult as of May 8 to foresee the impact of these various countries' tariff negotiations. Previously, these numbers were estimated to be 100 billion yen. As I said, it was difficult to foresee the impact of the tariff negotiations with the United States. We provided a maximum amount of the impact as external numbers. However, now that 3 months have elapsed since then, we are now able to project the future market trends with a certain degree of accuracies. Therefore, we have decided to reflect these numbers and impacts in our new forecasts.
These figures include the latest figures for the impact of tariff measures and other factors on recurring profit for each segment, shown in the upper right corner of page 9, have been factored into this forecast. These figures include minus 19 billion yen for liner trade, minus 1 billion for logistics, minus 3 billion yen for automotive, and minus 1 billion yen for energy. As the impact on dry bulk is currently modest and not easy to measure individually, we have assumed the impact to be zero and have factored it into our market assumptions. Adding these figures together, the annual impact of U.S. tariff policy is estimated to be about minus 24 billion yen. However, this does not include the impact of additional port entry charges on non-US built car carriers that the USTR is considering. This is because the details of the application of additional port entry charges have not yet been finalized, and if they are applied, the impact on profit is expected to be limited by, for example, the introduction of surcharges. We will provide more detailed information by segment later, but please refer to page 12 for information on each level of profits, as well as the assumed exchange rates and bunker oil prices. Based on our target dividend payout ratio of 40%, and given the ongoing uncertainty surrounding current tariff policies in various countries, the outlook for the global economy as a result of these policies, and future cargo movement trends, we have not changed our initial forecasts for both interim and year-end dividends at this time, which are 115 yen per share for the interim and 120 yen for the final dividend, for a total of 235 yen per share for the full year. As mentioned in a review of our first quarter results earlier, we are currently conducting a share buyback. This total annual dividend forecast is based on the number of shares excluding those purchased back as of July the 31st. Next, we will explain the full-year earnings forecasts for each business segment, comparing them with our previous forecast. Please refer to page 14. The blue column in the center shows our revised full-year forecast for fiscal year 2025. First, for the liner trade, we expect recurring profit to be 70 billion yen, down 11 billion yen from our previous forecast. We expect profits to decrease compared to the previous forecast, taking into account the impact of tariff policies in various countries and not anticipating the short-term freight rate increase on Asia-North American routes from the summer onwards as initially anticipated. Regarding air cargo transportation, the share exchange between Nippon Cargo Airlines (NCA) and ANA Holdings was completed on August 1st of this year. Therefore, the results of NCA will not be included in our consolidated results. Next, regarding logistics, we expect air freight and ocean freight to remain strong. But due to the impact of tariff policies in the contract logistics business, we expect recurring profit to be 17 billion yen, a decrease of 1 billion yen compared to the previous forecast. Next, automotive. We expect recurring profit of 100 billion yen, up 4 billion yen compared to the previous forecast. although the tariff impact is expected to bring down profit by 3 billion yen, mainly in the Atlantic trades, the full-year results will improve, driven by the strong results in the first quarter. The recurring profit of dry bulk is expected to be 10 billion yen, down 7 billion yen from the previous forecast. The main factors behind the decrease in profits were increased costs in the first quarter, the impact of foreign exchange fluctuations, and lower profitability for certain vessel types compared to our initial forecast. Next, for the energy business, we remain committed to our previous forecast for full-year recurring profit of 48 billion yen. We expect both VLCC and VLGC operations to remain at the same level as our initial forecast, and we expect the business to remain strong, supported by stable profits from the LNG and offshore businesses. Going back one page, on page 13, we have the table of year-on-year comparison. Please refer to that table as well. So far, the explanation about the full-year forecast. Finally, I'd like to briefly touch upon the acquisition of healthcare logistics business, which we announced in July. Through an overseas group company of Youth and Logistics Global Management, established in April of this year, NYK Group has agreed to acquire all shares of Movianto International BV with the aim of acquiring the healthcare logistics business of Warden Group, European logistics company. And we agreed the agreement for the transfer of shares on August 1st. Pursuant to European legal procedures, the acquisition will be completed subject to approval by the relevant authorities in each country, and the company will be a wholly owned subsidiary of NYK Group. The overview and strategic significance of the acquired businesses as described in the materials. This is a business investment in line with a mid-management plan, and we believe that by expanding the logistics business, which is expected to achieve stable growth across our entire business portfolio, it will contribute to reducing earnings volatility and expanding the scale of earnings as a whole group. In the Q&A session, if you have questions, Mr. Banno, in charge of this deal, they will be happy to take up your questions. That concludes my explanation. In addition to the slides projected today, the materials published on our website also contain reference materials such as estimated values for key specifications for each business segment in the appendix. So please refer to them at your convenience. That concludes my presentation. Thank you.
Thank you. Now we would like to move on to the Q&A session. The first questioner, please. Thank you very much for the explanation. I have two questions. The first is about the automotive business. The tariff impact, there is about a 3 billion yen impact factored in for the Atlantic route. So can you give us a breakdown of that? And in the total number of transportation is going to come down by 1% year-on-year, 2% in second quarter, and that 1% in the second half. So what is the total reduction for the North American route? Can you talk about that? My second question is about the healthcare logistics business acquisition. The 134 billion yen was the revenue size that you have disclosed for fiscal 2024. If you have any numbers that you can share with us with respect to the profit size, that we appreciate. The multiple, I think, was it on par with the market prevalent level? Were you able to acquire that price? And when will they start to make contribution to your business? Thank you very much for the question. First, regarding automotive business, I would like to answer that question. For the North America route trade in the beginning of April, the Trump administration, they said that in addition to reciprocal tariff, automotive tariff was implemented by the administration. The impact from that, mainly according to the cars that we transport from Asia to Japan, those are the main cargo that we are transporting. And the impact for that trade for the April to June period was insignificant, actually. But then on the other hand, from Europe to North America, in this Atlantic route, from Far East to Europe and then to North America, that is the main route that we use. But those vessels that went to Europe coming back to Far East, as part of that trade, some of the vessels will bring the European cars to North America and then come back to Japan via North America. That is one of the transportation routes that we use. For that part, from April to June period, there was a little bit of impact, a slight impact there. But as far as some European manufacturers are concerned, they have reduced the exports to North America. That is already happening. So that was an area that there would be an impact. So that accounts for the bulk of the 3 billion reduction in terms of revenue. I tried to answer your question. Thank you very much. I understood very well. And then the healthcare logistics business will be explained by Mr. Banno. Thank you very much for the question. Regarding the profit level of this company, we have an agreement in place with the seller, and that is not to be disclosed, so I cannot answer that part of the question. Regarding the multiples for the acquisition, EBITDA multiples, again, this number cannot be clearly stated. But over the last several years, these healthcare logistics businesses, they have been acquired by some other companies in Europe mainly. So I think there's a range there. So within that range, we have been able to come to an agreement with the lower part of that range according to our recognition. As for the schedule, actually the announcement was about the put option agreement that we concluded. So we have made an announcement that we have come to an agreement for the put option agreement. And that was the European side of our processes, exerting the option rights. And then after that, the SPA share purchase agreement was to be concluded. But to be honest, to give you the conclusion first, after the announcement, last Friday, the SPA agreement was already concluded as of Friday last week. It was quite speedy to a level that we are also surprised by the speediness. And after that, not only the antitrust, but also a lot of procedures remains that because this is an M&A agreement and we have to do a lot of clearance with the relevant authorities. And I think that is going to take several months to complete. So finally, I think this closing is expected to be sometime in the end, towards the end of the fiscal this year. That's it. Thank you. Thank you very much for your detailed explanation.
Thank you for the question. Moving on to the next question. Thank you very much for your presentation. I have two questions. On page 9, the impact of tariffs are now incorporated in the forecast as to 19 billion yen of the liner trade, negative impact of 19 billion yen. And in terms of volume or the unit price, freight, and cost, could you please give us some breakdown of those the negative impacts? That's my first question. And the second question is about logistics. On page 4, I have two sub-questions. As to the air cargo transportation, I mean the air freight. Here it says the decline in purchased prices. What about unit price and also to the contract logistics? There's the volume decrease. That's the result the described here. What will be the trend? Would that continue into the future? Container ONE logistics. So the Bando-san is going to answer your question. Thank you for the question. First, liner trade. The impact of tariffs, 19 billion yen impact, and the breakdown of the number. I understand that's your question. And of course, that includes increased cost. So rather than tariffs, in terms of tariff, I should say, the cost did not increase so much. It's just the volume and unit price. As to volume, already in the first quarter, especially in April, May, big decline in volume and the increase significantly in June. But all in all, slightly weak. And the freight first quarter was weak. But from the second quarter and onwards, as to the logistics, we did not expect many changes, but the unit price is expected to go down slightly. And that is, those are the elements for this 19 billion yen. Especially the North American route, starting from about now through the autumn. Usually there's a boom, but in June there were significant movements of the cargo, and because of a concern about the tariffs, the imports are decreasing, so we will not face a big season this year. So that is a big element. That is for liner trade. Next, logistics. AFF, air freight. The margin is increasing because purchase prices are down. The market conditions are not necessarily strong, actually coming down most recently, but the purchase prices are coming down more significantly, so margin is increasing. Going forward, it depends on market. As to contract logistics, North American customers, April and May, from China to the US, the general consumables, the orders have stopped. Orders stopped temporarily, and in June, those consumables did not reach North America. So the contract logistics associated with the North America suffered decrease in profit, and that's a big impact. So what about going forward? To be honest, it's very uncertain. That's what I can say for now. 90 plus 90 in terms of tariff. The part of the tariff the development had stopped, and because of that, there's more movement in the logistics, but we did not factor in the full year forecast, the bigger impact coming from the more impact from the tariffs. We assume that the current trend will continue within this year, but if there is more additional tariffs coming in, then the imports from China are very likely to decrease. But at this moment, that element has not been factored in. Thank you. Thank you. One additional question. From the second quarter and onwards, for the liner trade, the unit price is likely to come down. Is this because of the North American route? Not so much for the European trades? Thank you for the question. As to Europe, at this moment, the numbers are becoming very strong. And also for several months to come, it's not likely that the volume will decrease. In May, when we made an announcement as to European trade, because of European economy and the concern about it, we could not be very bullish. But currently, the current level of volume is higher than our expectation, and it's likely to continue for a while. So the European side is getting better than the North American side. North America and other trades that are kind of offsetting the good news in Europe. That's clear. Thank you.
Thank you for the question. Now we'd like to move on to the next question. Thank you very much for the opportunity. I have two questions. One is just a confirmation of numbers. With the revised forecast, ONE's profit, it was 1.1 billion yen dollars in the beginning of the year, but this was brought down to $700 million US. Is that correct? And if it's coming down from 1.1 billion to 0.7 billion, it represents a downward revision of close to 20 billion. But because the liner trade is 11 billion, so was it the terminal business turning favorable? So can you just comment on the difference? And the second one is a dry bulk downward revision. You provided us with an explanation, but I would appreciate some more details. What are the vessel types? Is this a one-time cost only? Is that included? If you can add some more color to that, that would be appreciated. Thank you very much for the question. First of all, ONE profitability, PL's basic assumption is that 1.1 billion coming down to 0.7 billion US. As we mentioned earlier, because of the tariff impact, the 19 billion yen impact is almost identical to that number. So, but in totality, the 11 billion revenue profit decrease. So the difference, as you rightly pointed out, terminal and also the tugboats business. In addition to that, there are some containers that we still own, and those are rented out to ONE. That kind of business is still what we have in place, only for NYK only. And the hiring of ships will improve in line with the market. So that is one thing that is turning favorable. So these revenue coming from chartered vessels is making a contribution. So therefore, 11 billion yen altogether. That was about the liner trade. Did I answer your question? Yes, I understood. Thank you very much. And the dry bulk business. Some vessel types that are not represented in index, the chips vessels and the box shapes vessels, those vessel types, individual with customers, we have a contract in place with them, and the semi-liner cargoes are transported with them. So with them, compared to our initial assumptions, the contract with customers, because of the circumstances of customers, some of them have changed from the initial assumptions, and also the freight level has dropped compared to our initial assumptions. So those are the major factors that's affecting the performance of those business. Thank you. With respect to the second point, are you not making allowances? No, that's not the case. Thank you. Understood.
Thank you for the questions. Thank you. I have two questions. First, ONE, the profit forecast, 1.1 billion to 700 million yen decline. without the assumptions. Mainly, it goes down in the second half of the year. But the evidence for that is not very clear yet. So maybe you didn't really need to the revise down the forecast. Could you please elaborate on your thinking? Could you please talk about whether you were using those numbers for the second half? And the second question, the dry bulk and on a full year basis, and some decline in recurring profit, but the rate has been changed to 145 yen per dollar. So maybe another change in FX might not be so necessary. What is your judgment basis for these numbers shown this time? Thank you for the question. So for the ONE question, in the second half of the year, the cargo movements, market, the conditions, what our thoughts, our outlook, Banno-san is going to explain about that. Thank you for the question. For the fourth quarter, but not necessarily only fourth quarter, the first quarter and the fourth quarter worse than our original expectation. But the second quarter, about the same, flattish, or a little bit better. The third quarter, flattish. It's not written here, but roughly speaking, that is our perspective. And for the fourth quarter, a decline there, you're right. It's far down the road, so it's not visible yet. But not just us, but the three, the shareholder companies of ONE have had lots of discussions if this level is really likely or unlikely. After that discussion, we came up with these the numbers accepting the thoughts coming from Singapore. And usually Chinese New Year, toward the Chinese New Year, the volume increases. But this time, this year, that movement will be a bit weaker than normal years. So at this moment, what will be the correct the level? We cannot make a very accurate judgment. But we shareholders agreed with the ONE side's the thinking. Have we answered your question? Yes. Then moving on to dry bulk, FX element, and how we look at the market conditions. I mean, on the full year basis, when you change full year plan, if the $1 stays at 145 yen, then the FX gains and so on, maybe based on that FX level, maybe the operating profit that you don't need to change it. So it's not only about dry bulk. That's right. So you change it to 240 billion yen, the whole portfolio. If you had changed FX, you had not needed to change the other profit lines. Well, it's difficult to come up with the accurate FX view. In the first quarter, for the dry bulk business, we said that there's impact coming from FX. FX per se, because our earnings, most of them are in the dollar, so there's fluctuation because of that. And also the trades receivables and the dollar cash are held by overseas subsidiaries. And when the FX changes during the period, then the timing of booking and the timing of really getting the revenue, there's a gap between them. So there are gains and losses because of that. 149 yen in the first quarter in April, but 152 yen in the May. and the yen appreciated temporarily. And those movements bring about the FX losses. Currently, it is about 147 yen. So for the second quarter, compared to 140 yen, we raised it to 145 yen because already we are looking at the changes in the effects. So 145 is closer to the real the FX level. It's really difficult to look at FX, U.S. economy, and the unemployment ratio, and also the big monetary policies. Based on these elements, yen could be stronger. So we might be on the rather conservative side, but in the second half, we keep the FX rate at 140 yen. And internally, we came to a conclusion that that level will be appropriate. And so that's the FX rate we are using. I understand. For the clarification, the car carriers, for example, the results are better than the plan. So other than dry bulk or container, for example, energy, those businesses are not so bad. So basically, the conservative assumptions, based on such assumptions, you came up with those numbers. Am I right? So I'd like to know more about your confidence in those numbers. As to FX, we did not use our discretion. It's neutral. So for the second quarter, we thought that the 140 will be good. And the second half, 140 yen. So through this, well, looking at the numbers issued by financial institutions, we made a judgment. So for each, it's not that we decide on effects for each business segment based on their results. Excluding FX factor, then the impact coming from market conditions, for example, container, ONE, and dry bulk. For example, for dry bulk, market assumptions are not so different. We have not changed it so much from the beginning of the year, but there are some ups and downs due to what we carry. But at this moment, the market conditions and perspective has not changed so much. If it does, there will be an impact on numbers. But the automotive and energy, rather than market conditions, it depends on the mid to long-term contracts. So relatively speaking, it is not so vulnerable to market condition change. Understood. Thank you.
Thank you. Moving on to the next question. Thank you. I have two questions. The first question, somewhat detailed question, but in the first quarter, there was a one-off profit coming from in the energy business. So how much was that one-off business? And is there any other one-off element for the first quarter? And how does this one-off element factoring in your full-year forecast? And the second is related to the healthcare logistics business. Synergies. What kind of synergies are expected in what kind of time frame? Can you explain that? That would be appreciated. Thank you very much for the question. First, regarding the energy business. In the offshore business, one-off profit coming out of the offshore business. This is mainly in relation to the offshore business, SPS business. Before the vessel becomes operational, when they are berthed at the berth, the expenses after the shop becomes operational, this will become a lease liability, lease receivable. So the gap of that will be accounted for as one-time income. So in this case of FPSO project, this is something that usually happens. So this time around, this has been recorded. So the size of this one-off income is not that significant, but the actual amount altogether will be less than 20 billion yen altogether. So that is the size of the business. Well, this was recorded as one-off income this time around, but for energy business from next fiscal year or from the second half of the year onwards, the LNG vessels will become operational. So these will make contribution, and therefore the profit level will be sustained. We are not expecting a decline in the profit level at the current moment. So other than this, there are no major other one-off elements in our current projection. So that was the explanation relating to the energy business. Did I answer your question? Yes, you did. Thank you. Now, regarding the healthcare logistics business, this will be explained by Mr. Banno. Thank you for the question. With respect to the synergy, I think that was your question. Yusen Logistics, especially in Europe, we've been engaged in the healthcare arena in many different ways, but this time around, this Movianto group, the Walden group, in terms of size, in terms of coverage, it's quite a sizable company. So, and the truck transportation on the land, we have so far outsourced our business to other companies, but they are capable of doing them on their own. So this is a synergy that we can expect. We can utilize their resources in that regard. To give you more details, up until now, all the services that we outsource to other companies can now be switched to Walden's assets, and we shall be able to offer these services to the broad customer base of Walden, and the Walden services that they offer can be provided to our current customers as well. So those are the immediate synergies that we can target for. So immediately after the integration, I think this will start to show effects immediately after that. So in the first year, those are the effects and the contribution that we are expecting from these M&A. But as with other M&A projects, in many cases, one-off costs and expenses happen in the beginning, so they may offset these contributions. So the forecast for the actual numbers, I think these will kick in starting from next fiscal year onwards. So therefore, when we provide the explanation for next fiscal year, we'll provide you with more details. That was the short-term things, but for the medium and longer term, we believe that the healthcare business is expected to grow over the longer term, and that's not limited to Europe only. Asia, North America, we've been engaged in these kind of businesses even by on a little scale from before. So we would like to leverage our relationship with these partner and expand what we have been rolling out in Europe and other markets as well. So those are the expectations that we have from this acquisition. So this may be something further down the road, like several years ahead, but those are the expectations that we have had in deciding on this M&A project. That's all for myself. Thank you. Understood. Thank you.
Thank you for the question. Next question. I have one question. This healthcare logistics business, the cash used for the acquisition and your expectation of the profit. I mean, I think you had a little bit less than 700 billion yen, the cash the flow expectation. That number includes this deal. And in your midterm plan, new businesses and services, that's 400 billion yen, 450 billion yen rather. This particular deal, is included in that number as well? Thank you for the question. Please look at the appendix. Page 23. We have business investment policy. And on the next page, on page 24, we have cash allocation described. So if you look at page 24, cash allocation, so existing business and new business at the 1.3 trillion yen. I mean the 1.3 trillion yen. But we are going to sell some businesses, so it will be around 1.4 trillion yen. So this the acquisition of the healthcare business of Warden is included in this 1.4 trillion yen. On page 23, this time new business and services and technology, new technologies and services. There are various deals. And core business also has earmarked the big weight of our budget among various investment deals when it comes to M&As. The order of the execution is engaged with the opportunities. So 800 billion of core business is kind of transferred to the new technology and services, making the whole the amount about 1.4 trillion. So on page 24, cash allocation latest plan remains the same, more or less. So it's based on this the latest plan that we can position this the latest acquisition deal. So that means the cash allocation at 200 billion management allocation remains unchanged. Am I right? You're right. That said, this is linked with profit plan. So the management allocation 200 billion yen that absorbs the impact, and it might increase in the next year. So this management allocation here, 200 billion, still exists. Thank you.
Thank you for the question. We still have some more time. If there's any other question, since we are approaching the scheduled time to finish this session, and there seems to be no further questions, so we would now like to finish the Q&A session at this juncture. Thank you very much to you all for your questions. With this, we would like to finish fiscal 2025 first quarter earnings call. Thank you very much indeed for taking your time to attend this meeting.